Good afternoon, this is Todd Horwitz, coming from the floor of the CME Group in Chicago. And as we continue to track and look at gold, we would have to say the shine is worn off here of gold. It had every ample opportunity to try to break out and get to the next levels, but it failed once again at about that 1362 level and is now headed a little bit lower, although a little bit higher today. But overall, we're starting to turn our way back down lower again. And when we look at the overall picture, when you take a look at the plunging US dollar, which should be a big boom for the gold markets, you are not getting the overall rally. Gold is basically flat while the dollar is now on 4-year lows. So when you look at that picture, you got to say, well, what's wrong with gold? And what's wrong with gold is it has to come down and go lower. I think what you're going to really see before this is all said and done, we're very bullish gold longer term, but in the short term here, we're going to test most likely the lows of 1238 to 1240 before we get that next big leg up and make a run to possibly test the original highs, which were made in 2011. But when you look at the overall market, there's a lot of factors that should be sending warning signals to you saying, hey, why isn't it performed better? Well, it hasn't performed better because there's actually a lot of work to be done here between the cryptocurrencies and what's going on in the general markets and the currency wars. That's keeping the pressure on. Look for gold to go down, and obviously not in one day. We would first look for probably 1320, then 1300, and then about 1270, and then down to 1240. That would be the range I would see it trading down to. That's the way I see it. This is Todd Horwitz, coming from the floor of the CME Group in Chicago.